You probably think your money's safe sitting in a bank. After all, it's what we've been taught since childhood. Put it in the bank and forget about it. But what if I told you that the banking system isn't built for your benefit at all? In fact, billionaire Henry Ford once said, "It is well enough that people of the nation do not understand our banking and monetary system. For if they did, I believe there would be a revolution before tomorrow morning." That's not just paranoia. It's a peek behind the velvet curtain of finance, a world where wealth multiplies for the rich and vanishes for the unaware. Most people have no idea how banks actually make money from them. That knowledge gap is one of the main reasons the rich keep getting richer. But today, that ends. I'm about to expose the secrets. Banks don't want you to know how they profit off your money and how you can flip the script and take control of your financial destiny. So if you're serious about building wealth and not just working for it, hit that subscribe button, because this is where financial freedom starts. The origins of banking. Long before skyscrapers and Wall Street, the seeds of modern banking were planted in the dust of ancient Babylon. We're talking 7th century BC, when moneylenders would scratch deals into clay tablets and charge interest on borrowed silver. It was primitive, it was raw, and it worked. Fast forward a few centuries, and the first real banks began to take form, not in New York or London, but in the bustling markets of Italy. The word bank actually comes from the Italian word banco, meaning bench, because money changers literally sat behind benches in crowded plazas, swapping coins, trading currencies, and laying the foundation of a system that would one day control the world's wealth. By the 12th century, things turned serious. A cartel of private lenders in Genoa came together to create what's considered the world's first official bank, the Bank of St. George. This wasn't just a few guys lending gold. They were loaning money to governments to fund wars. In return, they got the legal right to collect taxes from citizens. That's right, early banks weren't just managing money, they were acquiring power. And ever since, banking has been a game of influence, a tug-of-war between public trust and private interest. For centuries, bankers have walked the thin line between genius and greed. In medieval Europe, they were seen as cunning manipulators, so much so that lending money at interest could get you banned from communion and denied a Christian burial. And today, let's just say, not much has changed. Bank secrets, how they really use your money. Let's get one thing straight. Banks don't store your money, they use it. When you deposit your hard-earned cash into a savings account, you might think it's sitting there, safe and sound, waiting for a rainy day. But the truth is, the moment your money hits that account, it becomes part of a much bigger machine, a machine designed to make the bank rich, not you. Here's how it works. The bank pays you peanuts in interest, maybe 0.5% if you're lucky. Meanwhile, they take your money and loan it out to someone else at 4%, 8%, even 20% if it's a credit card or personal loan. They pocket the difference. That's called the spread, and it's the lifeblood of banking. You think you're earning interest, but you're actually losing money. Why? Inflation. If inflation is rising at 2% a year and your savings are growing at just 1%, your purchasing power is shrinking. You're bleeding value quietly, invisibly, and the bank is profiting from it. But here's the real kicker. When you put your money in the bank, it doesn't just sit in your name. It legally becomes the bank's asset. That means the bank can do whatever it wants with it, including lending it, leveraging it, or using it to meet capital requirements for even more aggressive financial plays. And guess what? The government's in on it too. Regulations actually encourage banks to circulate your money instead of protecting it. Why? Because that money fuels the economy on paper. But in reality, it's enriching institutions and leaving the average saver with crumbs. This is why the wealthy don't keep their fortune in savings accounts. They invest. They build businesses. They buy assets that appreciate over time. Because they know, letting your money sit in a bank is like planting seeds in concrete. Nothing grows there. The rich get preferred, and the rest get judged. Here's a harsh truth. Banks don't treat everyone equally. In fact, they don't even pretend to. Walk into a bank dressed sharp, wearing a designer watch, and you'll notice how quickly the staff smiles at you, offers you coffee, and suddenly finds loan options you didn't even ask for. Walk in looking broke, stressed, or simply average, you'll probably get a polite nod, and a generic brochure. The system isn't just biased, it's built that way. Bankers, whether they admit it or not, size you up the moment you walk through the door. If you look like you need money, they see you as a risk. If you look like you don't, they see an opportunity. The irony? The people who need loans the most often can't get them. And the people who don't need a dime are the ones being offered hundreds of thousands. But it goes deeper than that. See, banks love wealthy clients not just because they have money, but because they offer leverage. A rich person can secure a loan with assets, property, or a business. Even if things go south, they have options. Poorer clients? Not so much. So when it comes time to approve or reject that mortgage, that business loan, or even a simple credit increase, appearance and perceived wealth matter more than your hopes or intentions ever will. And get this, bank employees often have an incentive to approve certain loans. Toward the end of the year, many managers are chasing performance bonuses tied to loan volume. So if you happen to apply in Q4, you might get approved not because you're qualified, but because someone's trying to hit their target and get a fat year-end check. Rich people know this game. They time their requests. They know how to present themselves. And they walk out with approvals the average person can only dream of. You are the product. How banks profit from your name. You thought your bank account was just a safe place to stash your money? Think again. In today's financial world, your name, your habits, and your data are gold mines. Banks aren't just sitting on stacks of cash, they're sitting on massive databases of client information. That includes your age, spending patterns, income range, credit history, job title, and more. This data is more valuable than you think, and banks know exactly how to monetize it. Sometimes it's subtle. You might notice targeted exclusive offers showing up in your inbox, credit cards you didn't ask for, loan deals you never searched, or personalized ads that hit a little too close to home. That's no accident. Your bank is analyzing everything you do and tailoring their pitches accordingly. But sometimes, it's worse. There have been countless cases where banks quietly and questionably sell access to their customer lists. Not to scammers, we hope, but to aggressive microloan companies, insurance firms, or data brokers. One wrong click, and suddenly you're getting cold called about debt consolidation or instant approval payday loans. And let's talk about credit cards. You're probably paying more than you realize. First, there's the obvious, the annual fee. But then comes the hidden layer, the shadow tax. See, when you swipe your card at a store, the fee that's supposed to be charged to the merchant is often passed back to you. How? The merchant raises the price of the product to cover the bank's processing cost. So technically, you're paying a premium every time you use plastic without even realizing it. The more you spend, the more the bank earns. Not just from fees, but from learning your habits. What you buy, where you go, how often you shop. Over time, you become less of a customer and more of a data stream. And the rich, they don't fall for it. They negotiate lower fees, get cards that give them real value, and in some cases, use private banks that don't play by the same rules. Better deals for the rich, and what you should do instead. Here's the cold reality. Banks are businesses, not charities. They don't exist to help you, they exist to grow, to please shareholders, and to maximize profits. And from a business standpoint, lending to wealthy individuals is just safer. Think about it. If a rich client defaults, they can liquidate assets, real estate, stock portfolios, even entire companies to pay the bank back. If a regular working-class borrower defaults, there's often nothing for the bank to collect. That's why wealthy clients get lower interest rates, more flexible terms, and better customer service. They're not just customers, they're investments. And in case of a crisis, some banks will actually borrow from their wealthy clients just to stay afloat. That's how much leverage the rich have in this game. So where does that leave the rest of us? Here's the truth most people never hear. The system isn't built to make you rich. It's built to use your money to make others rich. But if you understand how the system works, you can stop being the fuel and start building your own engine. Instead of parking your cash in a savings account that barely keeps up with inflation, consider putting it to work. Invest in yourself. Build a business. Buy income-generating assets. Diversify. And when it comes to spending, avoid falling into the credit card trap. Every swipe feeds the machine. Whenever you can, pay with cash not just to avoid shadow taxes, but to force yourself to be mindful. Physical money leaves a different impression. It's real. It's finite. Take back control. Look, this isn't about hating banks. It's about understanding the game. Because the truth is, you've been playing it since the day you opened your first account. You just didn't know the rules. But now, you do. The system is designed to reward those who ask questions, who think critically, and who take action. If you blindly follow the financial advice handed to the masses, save a little, use your credit card, trust the bank, you'll end up exactly where they want you, stuck, compliant, and broke. But if you start thinking like the wealthy, treat your money as a tool, not just a safety net, and question every convenient offer that comes your way, you shift from being a consumer to becoming a strategist. And that's when the game changes. So take what you've learned today and use it. Audit your accounts, cut unnecessary fees, rethink where your money lives and who benefits from it. Build wealth on your terms, not theirs. This is your move now. Don't let the system play you. Thanks for watching. This is the main channel on finance, and if you're serious about taking control of your financial future, go ahead and subscribe. Because every week, we bring you the truth they won't teach in school. Until next time, stay smart, stay free, and stay dangerous with your money.